afternoon, everybody. Good afternoon, Hong Kong. Good to be here with you guys all. Oh, move in a little more. There you go. Okay, very good. My name is Josh Gordon. I'm the managing director of Chintai. We are a real-world asset company that focuses on the tokenization of securities. And I have David Packham here, who is our CEO. I'm gonna let him tell you a little bit about himself, and then we're gonna show you a quick video which demonstrates our platform. And then we're also gonna kind of walk you through a live platform, which is the DNA Deal Desk, so you can understand a little bit how it works and actually look what it feels like to go through the process. David?
Yeah, thank you very much, everybody. And maybe we should start with a small, almost like a fairy tale. Once upon a time, before Pump Fun, right? Yeah. Before the industry had Pump Fun, which was all about issuing tokens as rapidly as possible, deploying a secondary market, there was a bigger vision in the crypto industry that was actually driving all of this, which was we would do all of that for actual tokens with utility for real that affected the real world and the real economy. That was the journey we started off with Chintai back in 2018. By that point, I had had around about 15 to 20 years working in financial services, in banking. I started out my career at Merrill Lynch, moved to Goldman Sachs, Credit Suisse. I was on the buy and the sell side, tech, and then in finance. And when I got into the industry in 2017, there was a lot of people who were there for the right reasons, in my view, and they were there to try and actually change the world for the better. And what we were looking to do was, when we started the journey with Chintai, was to effectively do what Pump Fun has done, but for real-world assets. So rather than listing things that turn out to be rugging scams, and we're back to the same old games that we saw in the DeFi sector before. We were building a much more difficult, longer, harder path, which was to get the licensing to actually enable security tokens to be issued and made available to a much wider group of people, and to do it all in a way that can actually enable us to change the system for the better and actually really broaden out access as well. And that's the driver behind Chintai and why we started a 6-year journey to get to where we are.
Yeah. Awesome. Jake, will you play the video a little bit? We just want to show you guys a little bit about the company, how the platform works, and then we're going to walk in and actually walk you through a live platform here.
Evolving capital markets landscape, inefficiencies, exclusivity, and costly intermediaries present considerable challenges. Chintai addresses these challenges head-on with its end-to-end compliant digital asset platform designed to enhance efficiency and accessibility in capital markets.
Here, let's just do this. Get rid of the video. We'll just go to a lot. We'll bring you into an actual.
That's fine.
Oh, yeah. To reach $16 trillion in 2030, the potential for real-world asset tokenization is undeniable. Innovative financial institutions and progressive businesses are capitalizing on this opportunity. And with Chintai as the partner, your enterprise gains a distinct competitive edge. Whether you're a leading institution or an emerging enterprise, Chintai empowers your business to seamlessly create and issue diverse digital assets, from equities and bonds to real estate and funds. Immerse in the benefits of the on-chain secondary market ecosystem, where instant settlement, low latency, and seamless listings are the norm. Operate with full confidence, supported by Chintai's built-in automated compliance engine, which ensures every action aligns seamlessly with regulatory standards. For those seeking customization, Chintai provides unparalleled opportunities. White label and personalized products with the developer tools, crafting a branded user interface tailored to your business. Streamline operations with automated corporate actions, enhancing efficiency to meet the demands of capital markets. As allies to promote global climate action, the Chintai platform uses sustainable blockchain protocol interoperable with more than 30 protocols, and it is EVM compatible. Chintai is the trusted technology partner that energizes businesses to disrupt the marketplace. Talk to us today.
So a lot of people talk right now about real-world assets, and what does this actually look like? Obviously, David and I's background both is in traditional finance.
Pricing change
Jake, you're getting for sure fired over there today. No, just kidding. So our primary focus was to figure out how do we bring as many assets on chain as possible right now? How do we figure out how to do this effectively, and where do we start? What we found was let's start at the fund management level. Let's go down to these issuers directly, and let's work with them to build a customized solution to be able to embed it directly into their platforms so they can start to utilize the ability and the tools of tokenization. Right? It's very difficult for us to figure out how to deal with fragmented liquidity and distribution, but it's much easier if we work directly at the fund management level. And from there, we actually can go direct to their LPs so that they can get access through the DeFi ecosystem and by transacting in stables. So I wanted to show you guys the DNA deal desk here specifically right now. So if you come and you click into the DNA deal desk, you can go into let's see how this Wi-Fi goes. So DNA itself has created a separate page here, so you can kind of learn a little bit more about their deal desk. You can go in, watch a demo, learn about investing, why this benefits you, see an actual video, learn a little bit about the team, and actually submit your project. So if you're looking for funding and you're looking for help and advisory services, DNA is running a venture studio specifically on the DNA deal desk. So then let's go specifically to the marketplace here. What I want to show you guys is this is kind of what DNA's white label platform looks like. Here's a bunch of the assets that they're supporting individually. Some of these companies you guys know and have heard them speak up here. Jake, if you could go into the DNA fund and click see more. What we do is we do everything from cap table management, dividends, distribution, data room storage, all in one place. Exactly. You can just leave it here for a minute. We can just talk about it a little bit. David, you want to just talk a little bit more about Chintai, what we do, the type of asset classes we're working with?
Yeah, and I think we've touched on funds already, but something that's really worth pointing out, and you get a sense of it here with the tokenization of investment prospects by a fund like this. But actually, this can apply to many other kinds of use cases across a variety of different industries. We've got clients, for example, doing really innovative things. They're not just doing things like the tokenization of real estate. They're actually tokenizing rental yields on a portfolio, for example. And so what you get from that, if you're thinking about yourself as a crypto investor, right now in a crypto winter, you've really got an option of going into USDT, moving out into fiat, and all the associated problems with that. But we haven't really had many other options. You're either going into crypto or you're going into stables or you're taking it out of the system. But what we have with this is the ability, for example, to say, all right, we're hitting a crypto winter in theory. What else can I do with this that actually could be a yield-bearing, viable option, right? And for example, there maybe an 8 to 10% annualized yield off a really high-quality real estate portfolio. These are the types of opportunities that are really going to come from tokenization.
I think one of the really interesting things that we're noticing as we bring more and more high-quality assets on chain is we're seeing the ability to create DeFi 2.0. Right? It's not fictitious yield that's being juiced by tokens. We're looking at real yields from real track records from companies that have been doing this for 10, 15, 20 years. You can underwrite the fund, you can understand exactly how it functions, why it's a good investment. And I think this is going to be something that as our industry continues to mature, is going to be a very interesting opportunity for growth in the space.
So you're saying that none of the investments are going to do 10,000% returns per year?
No.
Okay.
But I mean, I've seen gold, it's like, okay, it's interesting. I've seen gold funds that are returning excellent returns in the 20% plus. I've seen oil funds actually returning over 30% over the last couple of years, right? There's a lot of opportunities out there that people don't know. The yields are amazing.
An interesting one, actually. The biochar token we issued, a carbon-related one, our first one, it was filled out primarily by Swiss Re eventually, but it was marked to market. It was nearly a 3x return for anybody who bought and then sold out on the secondary markets. So there are some great opportunities.
The thing is, there's a ton of high quality assets that a lot of people just don't have access to, right? Unless you have a $3, $5, or $10 million check and you understand who these people are and how to get access to the deal flow, it's very, very difficult and able to get into them. So for us, our goal is to go find, search, meet people, find fund-to-fund managers everywhere across the globe and start to bring these assets on chain and start to work through it. And be able to let you do it at a $5,000 or $50,000 investment instead of having to come and put in a $5 million check, right? It creates a very limited amount of people that actually can participate in these offerings. Our goal is to really democratize that opportunity and bring it like full scale.
Yeah, and one thing that I think people really piques their interest and they resonate with is if you think about yourself as an investor, maybe you want to invest in XAI or SpaceX or OpenAI. And these are huge companies with massive growth prospects that generally you can't get access into the pre-IPO rounds. But that we're already talking to a number of companies that have got those allocations. And for them to be able to just actually make that available, you tokenize it, you have secondary capabilities. You could put in $5,000 and get exposure into these. So it's a game changer across the industry. It's just the impacts of this haven't yet been seen and felt.
Yeah, it's been very interesting to see who our primary clientele is to start out. It's been a lot of real estate fund managers, investment banks, hedge funds. And what they do is when they come to me and they talk to me, they say, so you're telling me that I can just white label this platform and then directly get the rails into DeFi. I can start transacting in USDT, USDC, and allowing people to invest directly into SPVs that we're holding. And the answer is yes. And then it's very easy. The funds go, well, when do we start? Right? It's not that expensive. It gets you the ability to start to actually have access to this whole ecosystem. Cross-border payments becomes much more seamless. We have a multi-jurisdictional KYC configurations that you're able to go through and be able to do this all in one centralized place. And our goal is to keep making this better, not only for the people that are going to use it, for the fund managers. We really want to be able to bring tokenization full scale. We're launching multiple projects in the hundreds of millions of issuances that are coming on from all the different verticals that I said previously. We're very excited about what we've been building, and we think tokenization is going to be the largest. I made this argument on X recently. I said there'll be more total value locked from tokenized assets in the next 36 months than there is the total valuation of all of crypto right now.
Well, yeah, I mean, that makes sense. If you think about Ant Network's got a network token sitting at about, I don't know, maybe a $380 million market cap right now, and yet we've announced tokenization of around 1.4 billion already so far in the last 6 months. So that will follow naturally, that we're going to see vastly more coming on chain than the whole market cap of the crypto sector, for sure.
Any questions from anybody about tokenization?
Do you think we can actually deep
I don't know
dive
if I
into
wanna
the
even
platform, or
risk
you
it.
don't
I
want
might
to
just go.
Yeah.
The Wi-Fi's not working, so Yeah.
No.
Okay.
No. Fair enough.
Yeah. Raj.
How do you guys do interoperable permission? So if I want to transfer my token to either a third-party custodian or a self-custody wallet, how do you do permissioning for that transfer?
Well, so there's a couple of things here. Self-custody doesn't lend itself, or at least on public chains, very well to RWA at all, for the simple reason that at that point you can go off and send it wherever you like. So our network is configured with compliance at the token account level, smart contract level. So when it's issued by, say, DNA, they can decide where you're allowed to send it throughout the network. So you're still self-custodying, but you would be blocked from sending it to a user that's not appropriate. So that's how it's handled in the network itself. But to your point, you can send it into chain, but the venue really has to be a compliant venue that can handle RWA properly. And that's an industry-wide challenge that's slowly being met. So I think as more and more solutions become available, that's viable. What's typically happening whenever you see tokenization of securities generally is they're sitting in an escrow account on, say, an Ethereum chain or Solana or whatever, and no real on-chain activity happens there. You're not really self-custodying, it's somebody else doing it for you. And so that's broadly how that side of things is handled. I don't know if there was another question.
I think one of the interesting things is there's got to be consensus compliance, right? Because as the issuer, as you know, Raj, it's like we have to all work together, right? Anybody who has a real-world asset company, we need to have somebody that's coming in to create consensus around compliance. Because otherwise, if an issuer has a security token that goes to somebody that's retail that doesn't have the appropriate, access and accreditation to be able to hold it, who's liable? It's the issuer, right? That's how securities law works. So we have to be extremely careful in this case. So, we're looking forward to all working together to try to solve this problem.
Yeah, and I look at all of these other protocols and projects as future distribution venues. That's kind of how I look at this. I want to see a future not of everything going through one network or one provider, but actually the issuers and the investors just having a seamless choice where, to a large degree, which protocol they're using is fairly behind the scenes. They're not going to care. You might see some additional transaction costs because some bridging is going on behind the scenes, but that shouldn't be the end user's problem, and it gives actually more decentralization from that model as well. So that's certainly what we want to see more of as well. Wow, the network's changed as well. But yeah, so I think that, at least for me, is what's likely to happen. And there are some very good other projects out there that are starting to adjust and handle the compliance issues too. So as they come online, I see them as more partners for
Yeah,
that. as well.
definitely. I mean, we've been in discussions with everybody you could think of trying to figure that out, and distribution partners, and it's something that we think is extremely important for this to grow, really, because we can only deal with so many transactions inside our own network. We all have to work together. The why there's like the crazy network effect of a lot of these ecosystems is because they can work together. It's why Ethereum has been able to grow and scale so much, right? Is because they have such a crazy network effect. And our goal is to be able, the way we can actually construct the token is to be able to send it out, so they can have that ability.
Yeah, I mean, ultimately, I think anybody who is thinking about, do I want to build a business in this area with digital assets? What this kind of technology is about is enabling entrepreneurs to embrace this very, very rapidly and say, I'm going to actually issue a token. It's going to have these properties that maybe do bridge that gap in towards being security-like or offering dividend yields or other kinds of aspects. And I can do it, and I can not worry about an SEC coming after me, because we are on the right side of all the rules and regulations, and it is properly done, and it is properly controlled. And
it's been interesting operating in this space because people get very annoyed because we have to follow the rules, which is very tricky when you're operating with Web3 mindset, right? Like, people always come to me that we're working with, and they're like, well, why can't we just do that? I'm like, well, because that's against the rules. Right, so it's a unique bridge of us trying to bring this together and actually make these product offerings. We have really attractive products that are going to be coming online, multiple different yield products. We're really excited to share with you guys as that continues to come to fruition here shortly.
yeah, and I think the final thing from me really on this is to bear in mind that while we've had a lot of fun with meme coins yet again this cycle, that's been a PvP game of winners and anything made is at the direct expense of other investors. This is different. This is actually why most of the crypto industry really grew out in the first place, which is we are consuming the main system from within, and it is moving all these assets on chain. So this is actually the future of the whole industry. Real world asset tokenization is actually the most compelling use case we have. As an industry, it's the one, if you go out to the financial industry, the banks, entrepreneurs running businesses globally, it's the thing they actually will step back and go, that makes complete sense to me, tell me more, rather than making us as an industry look like a joke, which is, we are, unfortunately, we do that to ourselves somewhat, but we have fun.
Definitely. Any questions?
Your token has done really well. What's the trajectory, driving force behind that?
So, I'm a big believer in solid tokenomics and fundamentals, and I think that's why our token has performed certainly better than most over the last few years. And I mean, the drivers behind it were a few. We tried to do a fair distribution way back with mandatory KYC and AML. We built all this infrastructure ourselves, so we did it the right way, and it set a floor on the price. We didn't artificially set something, so everybody who's held the token over the years is up substantially because it was issued at a low fair value. That's one thing. It was also fully distributed within the first 9 months, and this is over 5 years ago now. But then the utility properties of the token are inherently linked to the network activity. So a bit like Ethereum in that regard too. Ultimately, the more commercial activity on the network, the more issuances that take place, the more secondary activity, all of that fuels some burn, continuous buyback, and then a yield component that's going to come online to holders who stake. So it's relatively straightforward tokenomics that most people can get their heads around. There's nothing too flaky and obscure. And I think in an industry where, unfortunately, you see massive vesting cliffs and VC unlocks and yield that is actually not real or sustainable, it's maybe inflation driven or it's some other semantics going on behind the scenes. I think that really is what this points to, which is if we design tokens properly with solid fundamentals, they will outperform over time.
And the idea is really it takes time. I think that's been our thought process on this. We're okay if it takes a little bit of time. We're not in a rush. We're not trying to get rid of our token. We're one of the few founder groups that actually has more tokens now at this point than we did.
Yeah, we've been buying this cycle.
Yeah.
Yeah, despite the rises, exactly. Yeah.
What do you think is, how many assets are on the platform now being sold? What's the level?
Yeah, we have there's eight current groups right now that are either in production or live. And we have signed roughly 50 coming from now until back half of summer. And really the only thing holding us back to not have more is just continuing to expand our tech team and continuing to grow our ecosystem, because it is a heavy lift for each one that we do, because we have to go through all the processes to make sure it's a legitimate asset. We have to go through all the setup with the SPVs, and it's quite a heavy lift because we're actually bringing real assets on chain. That's the biggest restriction, I would say.
So dollar value wise, so like what's being offered now?
Yeah, I mean, we have one client who you'll see in the next week who's doing 500 million in one issuance. So it's going to be quite a bit. I mean, the thing is that this is nothing for asset managers, right? Like for them to do 100 million is like no big deal. So when we talk to them, that's like the start. That's like, let's do a pilot project. How about 80 or 200 million? It's like, okay. Like, you know, it's very interesting. It's very different than when you're working in the crypto space, where if you could have a TVL of 100 million, that's like absolutely insane. But as like, even like Zebu guys, like you can have 5 billion run through your platform in 1 month. If you're actually doing real business and it's being funded by these large institutions, it's really not very difficult to have 10 billion by the end of the year. I mean, I think realistically, conservatively, I think we're going to be somewhere, you know, between 1 and 3 billion in assets we bring on over the next year.
We are. I think the crypto industry, though, needs to also understand that the total value sort of issued or on a chain like this, where it's RWA, is very different from crypto assets, where they're able to just take them, collateralize them, start doing circular DeFi, related things. These are assets that are sitting from an investment perspective. They're regulated. You're not able to play around with them in quite the same way. So for me, $10 billion on chain is not the same as $10 billion of, say, Bitcoin or Ethereum, where it's the network itself that's relevant.
There's also a sales process, right? So if you're bringing in a $500 million real estate fund, you now have your natural progression of going out and having the team that represents that fund sell that, right? So that may be a 3-month process, it may be a 1-week process, it may be a 2-year process. So each one has a different directive on why they're doing it the way that they're doing it. And that's something that's also going to be a little bit different for crypto to understand. Like, why does it take 6 months to fill an issuance? Well, because they actually have to go sell a real product, right? So it's very complex to actually work through all these things.
Yeah, well, also one thing I discovered early on is some people tried to get us to list things, and then I took them out to different investors. Would you be interested in filling this? And they said, no, it's a terrible company. I was like, well, that's a good point. You know, just because you tokenize it doesn't necessarily make an unattractive investment somehow fillable anymore. That's not how it's going to work. It's still going to be this the same level of standards are required.
We primarily try to work with people that have some level of LPs built into their offering, right? So that there's going to be some initial traction on day one. We don't want to just have things sit dormant, because
there kind of has to be, because the average crypto degen is not actually a viable buyer of, say, a real estate token necessarily. Or even if they are they really going to have the mindset to want to hold it for 3 or 4 years and be happy with an 8 to 10% yield? Right.
Well, not yet. Our goal is that you can start to integrate these into all the DeFi protocols once we can get KYC consensus figured out. And then from there, we're going to be able to have a process where people can be able to move these back and forth.
Well, I guess like the Clearpool announcement we had recently.
Yeah, absolutely. Yep. We're looking to partner with me. If there's any other RWA companies in here, we'd like to work with all of you. So.
Yep.
Anything else?
All good.
Awesome, guys. Thank you so much.
Thank you.